Welcome back to my final Morning Report chart analysis video on Wednesday 28th of September with me, Richard Perry, market analyst at Handset Markets. Let's look at gold. And we're still stuck in this trading range, aren't we? And the improved risk appetite in the last couple of days formed this bear candle yesterday, which dragged gold lower and actually below the support band of the pivot in this range, which is 1330. So that sort of turns the outlook more negative again. But you look at these RSIs, the RSI between sort of 40 and 60. That's very neutral, isn't it? That's basically indicative of a range-bound play. MACD line's neutral, and stochastics just turned over just the last sort of day or so, just to reflect this sort of deterioration in the near-term outlook. But the thing I wanted to point out today, predominantly, was this long-term bull trend, which currently comes in around 1320 and is being tested. And it could be that this medium-term range now, which is sort of dragged gold from the top of this trend channel back to the bottom, even though it's moving sideways effectively in a sort of 75 tick range or $75 range, that is sort of now putting this uptrend at threat. And you've got this 89-day moving average as well, which has been the basis of support through the last three big corrections in June, August and September. And that comes in at 1316. So these bullish technicals are being tested now on a long-term basis. So this medium-term range could turn out to be a continuation, a range that continues for the time being, and subsequently sort of breaks down the bull arguments for the long term. But the implications of that I will discuss at another time. But for now, we've got a couple of bear candles that on a daily basis that are dragging gold lower, and having broken back below 1330, that now becomes a base of resistance. Yesterday the resistance sort of came back in at 1328, around about there, but 1330 being an old pivot line means that old support becomes new resistance, so that is a level to play with on the upside as a ceiling near term. But you've sort of had this breakdown below 1325 again. That sort of puts you in a more negative outlook within the range, and every time that's tended to happen in the last sort of few months, the market sort of comes back towards the bottom of the range again, sort of 1302, 1306 area. So again, that sort of suggests that perhaps with the breakdown below 1325, we could see a continuation of the corrective move and break the uptrend on the primary uptrend. So it's becoming a bit of a sort of a concern, this medium-term range for the bulls, but the corrective outlook remains now sort of on a near-term basis. You've got the move below all the moving averages on the hourly chart. You've got a more corrective configuration on the hourly MACD lines, hourly RSI. And little rallies are being sold into. So as I said, 1330 is your sort of initial resistance. You'd argue 1338, which was the sort of reaction high, if I can get the crosshair on it, from yesterday afternoon, 1338 area. And a breakdown below 1325 reopens 1318 as a bit of a pivot line as well. You can argue a couple of highs, a few lows over the last week or so, and around 1318 before 1306 comes in as your sort of main support. So I wish you good luck in your trading on gold today, and I will speak to you again tomorrow. Thank you.